Welcome to this explainer. Look, I am absolutely thrilled to have you joining us today because we are tackling something that is, incredibly exciting, but also notoriously overwhelming. We're talking about the journey to homeownership. Buying a home in Louisiana, it requires strategic, proactive planning. It is definitely not something you can just guess your way through. But don't worry, today we are going to transform all that complexity into complete clarity using nothing but the data. Ever wonder if that dream home is actually affordable? It's a question that keeps so many future homeowners up at night, right? You see that gorgeous house online, the perfect porch, the beautiful oaks in the yard, and you instantly imagine your life there. But that listing price? That's just the tip of the iceberg. Beneath the water is the reality of complex finances. And to avoid sinking your budget, it is absolutely essential, and I mean essential, to know what your financial commitments will look like before you even step foot into an open house. Okay, let's dive into this. Here is our roadmap for today. We'll calculate the true home price, look at why a specialized calculator is your best friend, explore the variables you control, uncover hidden costs, and finally, outline the smart steps to secure your pre-approval. All right, let's start with section 1, the true home price, looking beyond the listing price. Because falling in love with the property before doing the precise math is the #1 trap buyers fall into. To build a solid foundation, we always start with this specific ratio, the 28-36 rule. This is your golden baseline for affordability. Basically, according to this rule, your housing costs should never eat up more than 28% of your gross monthly income. And your total debt payments, so that includes the future mortgage, car loans, credit cards, the whole shebang, should not go over 36%. Knowing this baseline right out of the gate immediately helps frame what you can realistically afford without, becoming house poor. I really want you to consider this for a second. The true cost of a home is not just the purchase price, but the total investment required to maintain and protect your asset over time. The listing price is literally just the entry fee. True investment requires precise, forward-looking planning. And guessing simply won't cut it. Which brings us right to section 2, why the calculator matters. Think of a Louisiana-specific mortgage calculator as your financial sonar. Look at this thing. If you wanted to calculate your monthly payments by hand, you'd be wrestling with this absolute monster of a formula right here. Unless you do advanced algebra for fun on a Friday night, and hey, no judgment if you do, this is exactly why we rely on specialized online calculators. A dedicated Louisiana calculator does all this heavy lifting for us. It takes the loan principal, the monthly interest rate, the total number of payments, and instantly translates it into a smooth, even monthly payment figure that actually makes sense. What makes the calculator such a game changer is your ability to test scenarios using these exact variables. If you adjust the loan amount, it directly helps you set a realistic price cap. Tweak the down payment, and you instantly see how it lowers your monthly obligations by shrinking the principal balance. The calculator allows you to safely play out a dozen different financial realities before you ever sign a single document. Let's move on to section 3, navigating mortgage variables. Steering through the numbers. Because the great news is you actually have a lot more control over these than you might think. Now, what's really interesting about this slide is how distinctly these loan types cater to totally different buyers in Louisiana. A fixed rate, that gives you high stability, which is perfect if you're settling down for the long haul. But say you're a first-time buyer, an FHA loan might be ideal because it requires a much lower down payment. We're talking as low as 3.5%. Or if you're a veteran, a VA loan requires absolutely zero down. You just plug the loan type that fits your life into the calculator and boom, it customizes your entire financial forecast. You also completely control the timeline. Look at these two side by side. A 15-year term means higher monthly payments right now, sure, but you pay significantly less total interest over the life of the loan. On the flip side, a 30-year term gives you much lower monthly payments, freeing up your cash flow for today, but you will pay more in total interest eventually. The calculator lets you weigh these two options against each other, so you can balance your immediate budget against long-term wealth building. To ground all these abstract concepts in reality, 6.59% is currently the average Louisiana mortgage rate. This is the baseline number you should plug into your calculator first. Remember, interest rates are essentially what you are paying to borrow the bank's money, and even a fraction of a percent can literally save or cost you tens of thousands of dollars over 30 years. And this brilliantly illustrates what actually determines the specific rate you'll be offered. Your credit score pretty much dictates everything. If you're up in that 760 to 850 tier, congratulations, you're unlocking the lowest available rates, but drop down into the 620 to 699 range and you're facing much higher borrowing costs. By plugging different rates into the calculator based on these credit tiers, you can see the actual dollar value of taking the time to improve your credit score before applying. All right, Section 4, Uncovering Hidden Costs, Beneath the Iceberg Surface. This right here is exactly why using a generic national calculator just doesn't work. Your actual monthly payment, it's split into multiple pieces. As you can see, the principal and interest are just one portion of the pie. A specialized Louisiana calculator ensures you aren't blindsided by the other slices, like property taxes, homeowners insurance, and potentially PMI. Take property taxes, for instance. They vary wildly depending on where you actually want to live. Notice how Orleans Parish sits at an estimated 0.69%, while Lafayette Parish is way down at 0.52%. A specialized calculator lets you input the exact local estimate for the parish you're looking in. If you ignore this and just use some generic statewide average, your monthly budget projection is going to be incredibly inaccurate. Then we've got PMI, private mortgage insurance. Basically, if you put down less than 20%, lenders require this insurance policy to protect themselves, but it's you paying for it, to the tune of 0.46% to 1.50% of the total loan amount every single year. That is a massive hidden drain on your monthly cash flow. Using the calculator, you can map out exactly how much extra you'll pay in PMI versus, say, waiting a bit and saving up for a full 20% down payment to eliminate that fee entirely. Finally, we have to factor in the fit-in costs that hit your savings directly. Closing costs in Louisiana? They'll generally run you between 2% to 5% of your total loan amount, and homeownership requires maintenance. Actually, experts say to expect 1% to 3% of your home's value in repair costs every single year. Knowing these precise numbers turns emotional guesswork into calm, data-based choices. Bringing us to our final section, smart steps to pre-approval. Here is how you take all that powerful data you've gathered from the calculator and actually apply it to the real-world housing market. So, the absolutely crucial point here is understanding the stark difference between these two terms. Pre-qualification is just a quick, general estimate based on what you tell the bank you make. It has minimal impact on a seller. Pre-approval, on the other hand, is backed by documented proof. It gives you a precise, hard budget limit and tells sellers in competitive Louisiana markets that you have incredibly high credibility and the absolute ability to close the deal. To get that highly coveted pre-approval, here is your exact chronological roadmap. Step 1. Run your scenarios in the Louisiana calculator so you know exactly what you are comfortable with. Step 2. Get organized early. Gather your W-2s, bank statements, and tax returns before the lender even asks for them. Step 3. Apply and secure that formal pre-approval. And Step 4. When you find a favorable market rate, communicate with your loan officer to lock in your interest rate to protect yourself from any sudden market hikes. Which leaves us with this final thought. You now know the variables, you know the hidden costs, and you know exactly why running the math ahead of time is your absolute greatest advantage. So, what will your Louisiana numbers reveal? Don't wait until you've already found a house and gotten emotionally attached. Go run your unique numbers through a Louisiana mortgage calculator right now. Get that clarity, eliminate the guesswork, and enter the housing market with undeniable confidence.